Hello, everyone, and welcome back. I'd like to hand over now for some closing remarks by Jonathan Graham. Jonathan is Managing Director, Head of Large Corporates, HSBC UK Bank PLC. He has over 25 years banking experience working in London and Europe, rest of Europe, I should say. Jonathan joined HSBC in 2014 after 10 years at RBS, where he was previously Head of UK Corporates in the Global Banking and Markets Division. He's worked previously at Crédit Agricole within its UK investment bank and at Société Générale as Director in Telecoms, Media and Technology Division. Jonathan is married with 3 children and lives near Cambridge, enjoys coaching hockey and other outdoor sports. So over to you, Jonathan.
Thank you, Caroline. I'm not getting much chance for outdoor pursuits at this moment in time, given lockdown. But firstly, I'd like to thank all the people, companies, corporates, contributors in the ACT for making this possible today. This is the second event we have executed using this platform. I think you'll agree it is a very effective form of interaction and communication in these uncertain times. We certainly had a whirlwind of topics today, ranging from the economic outlook, the Bank of England on the journey to net zero, which was, I think, complemented by the ESG panel debate. And then we've had various discussion groups this afternoon. To my mind, sustainability and ESG remains a key focus, especially in light of COP26 being hosted on our own soil towards the end of this year. I'm just going to dwell on for a minute on reflections on COVID and what we're seeing across the bank with our customers in the UK, from some of our smallest business banking customers up to the behemoths, as I would describe, in the FTSE 100. So, look, I'm optimistic in spite of COVID, and there remain causes for optimism. Before Christmas, we ran what we describe as a Navigator research survey within the UK market. And 71% of our UK businesses expect to have returned to pre-COVID levels of profitability by the end of 2022, a fifth by the end of this year. We also found that 85% of corporates identified concerns with their supply chains as they deal with the pandemic. Their concerns are focused around increasing costs, the stability of the supply chain, and suppliers being far away from their target customers, or their own business, in fact. To address these concerns, about 28% of our UK corporates are selecting suppliers based on how effectively the country in which they are based has managed COVID-19. 31% have increased use of technology in their supply chains, with nearly 30% selecting suppliers based on their ability to deliver quickly. In the UK, in the last 9 months, we've granted 9,000 capital repayment holidays. And the government-supported lending schemes, we've lent over £14 billion. That's 15 years worth of loans in under 9 months within the HSBC UK Bank. Unfortunately, we're now in a third lockdown. And the ask of our customers really hasn't changed much. And the general uncertainty COVID-19 brings is still out there. Indeed, the rollout of vaccines sort of brightens prospects, but there's no firm timetable, obviously, when this lockdown will be lifted. That said, our corporates are better prepared than perhaps when they were at the beginning of the last lockdown in March last year. And I take some comfort from recent trading updates from UK PLC, who are showing a lot more optimism and, in fact, beating market consensus. Last year, for many, they had to adopt their business models and strategies to make themselves sustainable and future fit. The challenge that remains this time around is very much around cash and capital structures. Are these appropriate? Is there enough to see the business through lockdown 3? And obviously to prepare for beyond that. We've seen central banks unleash as much as $15 trillion of fiscal stimulus across 54 countries. This has led to what I would describe as a healthier equity and debt capital markets. An equity recapitalization, in our mind, will be vital to restoring economic activity and business investment. And I'm sure you will have seen many in the news and the FT shoots of this already underway for our larger corporate clients. We also believe there is a role for a co-investment scheme from the government, similar to the Future Fund, and an increased role for the Business Growth Fund, areas we're currently in dialogue with the respective governmental authorities. Whilst COVID has been very difficult for many, it also is a technological accelerator in an environment where real-time, highly integrated tools were already being considered in Treasury environments. It has been a steep learning curve for many of us. But technology has been an area of investment for so many banks in recent years. Our customers' expectations are very much changing, and it's imperative we exceed these expectations. We see this as a time of enormous opportunity and also reflection on what it means for our own businesses. 2021 promises more change than we'll need to anticipate. Who would have thought, we're using Zoom today, that its market cap today would be greater than ExxonMobil a year ago? So we hope today has provided you with some comfort that the ACT and HSBC group, especially in the UK, can act as your trusted advisor in these difficult times. Thank you, Caroline. I'll pass you back.
Thanks very much, Jonathan, and thank you so much to you and HSBC for your support of this event. This is our 7th iteration, and as I said at the opening today, we've had such a long relationship with HSBC, probably the 40 years of our existence. So it's really great that you've supported this and that we've brought this group of 300 senior treasurers together today. I'd like to also thank all the participants, you, our audience, but our speakers, our moderators, and also the team of HSBC in the background with the thought leadership, the time invested in creating the content, co-creating it with ourselves. I'd also like to thank the events team and marketing team in ACT and the marketing from HSBC working together to really make this event as great as it has been. Just reflecting on the day, we opened with Janet talking about the global economic outlook, and I really enjoyed the way she told the story behind the trends and the numbers. So everything is on demand. It will be coming up in probably about the next hour, some of the first sessions, and then other ones will follow over time after that, and you'll be able to look at them for the next 14 days. So if there are any of those graphs or trends you wanted to see a little bit more closely from Janet, do go and have another look. Our keynote with Chris from the Bank of England, the journey towards net zero, that was absolutely fascinating as well. And he had a bit of a call to action. I think for us, he said there's no excuse to do nothing. And he talked about COP26 being, a movement to greater transparency as well. So some real key messages there that would be worthwhile having a look at if you've not had a chance yet. We had the panel talking about ESG, and a comment from Leila I thought was really, again, good piece of advice. Focus on your credit rating agencies, and that's really important at this time. So fascinating sessions. We went into discussion groups in the afternoon. So we had the 4 discussion groups. We talked about the holy trinity of liquidity, security and yield. The group that I was moderating, we talked about data-driven treasury. There was a balance sheet optimization session, and there was the central bank digital currency session, and you'll have been able to attend 2 of those live, but of course you can catch up on the other 2 or anything that you want to go over on your session. And what I'd also like to just flag up, interestingly, say in my session on the data-driven treasury and those trends, it was fascinating to see that the 2 sessions began similarly, but with a different Q&A, the second half is totally different. So it is worth scanning through and dipping into those. And of course, the on-demand recording we have about the myth busting around technology, you must have a look at that. So all absolutely great sessions today, and just thank you once again to all involved in preparing those. Just like to highlight now that next week on the 28th, we've got our working capital afternoon. So we've got a number of sessions running that afternoon, and be well worthwhile you joining us for that if you are able. And we have our cash management conference 23rd to 24th of February. We have, very importantly though, just opened registration for our annual conference, which will be virtual and which will take place on the 14th to the 17th of June. So be sure to join us there. HSBC will be there with us as ever, as one of our co-lead sponsors. So we're really looking forward to welcome you to that, as well as other events. And, you know, to the lunchtime session, which I didn't mention yet, run a lunchtime session on coping strategies during the pandemic. We had breakout groups to discuss further. Really enjoyed that session. And I would just say, you know, look at the wealth of resources we have on our website for our members, and look at the articles that we have. Go and look at the recording, the on-demand of that, because we must look after our health, and we're not always aware, you know, that we are, you know, these are tough times. 50% of adults, 2/3 of children are suffering from mental health issues due to COVID. So it's likely that the Treasury community is being impacted, and we know they are. But you may think it, you know, I can take the pressure. We often think that. Just you know, think about some of those coping strategies so that you do keep up your resilience, would be my final message. But thank you all very much once again. Thanks again. Big shout out to HSBC for all their support. Thank you.
Thank you, Caroline.